As we continue our conversation on climate change, we have a message from a special guest, which I think will roll on screen. It's Marina Silva, Minister of Environment and Climate Change in Brazil, which is hosting the COP30 next year. Thank you.
Okay, thank you.
Thank you, everyone.
Senhoras e senhores, agradeço a oportunidade de poder participar desse importante evento organizado pela Fundação Rockefeller e a CNN, Grandes Apostas para a Ação Climática. Acho que uma das maiores apostas que temos pela frente é o alinhamento das nossas ações à missão 1.5. Não ultrapassar 1,5 de aumento da temperatura da Terra. O outro esforço que precisamos fazer tem a ver com os compromissos assumidos em Dubai, na COP28, de triplicarmos energia renovável, de duplicarmos eficiência energética e fazermos a transição para o fim do uso de combustíveis fósseis. Para isso, vamos precisar de meios de implementação, que é o trabalho que será feito pela COP29 no Azerbaijão. No Brasil, temos o desafio de ter NDCs ambiciosas que estejam à altura dessa missão. Por isso é que é fundamental que lá no Azerbaijão já saiamos de lá com os meios de implementação necessários, sobretudo recursos financeiros, tecnológicos, a articulação para que recursos humanos possam ser viabilizados, sobretudo para que países em desenvolvimento possam fazer o dever de casa em relação ao desafio climático. Aqui no Brasil, em 2025, nós temos a responsabilidade de liderar pelo exemplo com ações que sejam ambiciosas em relação às nossas NDCs. E é isso que terá que ser feito por todos os países do mundo, para que possamos fazer o enfrentamento do maior desafio que a humanidade já teve pela frente, com ações voltadas para mitigar, adaptar, deixar as sociedades preparadas e, sobretudo, transformar o nosso modelo de desenvolvimento em um modelo mais sustentável, mais resiliente, que enfrente a mudança climática, promova a igualdade social e que fortaleça a ação conjunta nos espaços multilaterais.
Marina Silva, ladies and gentlemen, we are, 18 months away from that meeting. We are some 6 months after COP28 in Dubai and the UAE consensus, a meeting that proved to be super successful, not least when it came to commitments on climate finance. And that's what we want to talk about at this point. Thank you, Raj, and Ambassador Thomas Greenfield. It's no secret that meeting the climate challenges will not only mean finding allies, but also finding money, and lots of it. To that end, one of the major announcements coming out of COP28 was the launch of the UAE's $30 billion Altera climate investment vehicle, which aims to mobilize $250 billion worth of money. The why is straightforward. We need trillions of dollars over the next decades. 4 trillion annually is certainly one of the estimations that I get from BlackRock in some data that I was reading just recently. But we are talking trillions over the next decades. The how, well, that is where Altera comes in. And I'm absolutely delighted today to introduce to you Ambassador Majid Al-Suwaidi, who is the CEO of Altera and the Director General of the COP28 presidency, and mabruk on the success of the meeting held in Dubai. David Giardino is the Managing Director and Global Head of Climate Infrastructure at BlackRock, which is, of course, the world's biggest asset manager and has some experience in climate investment. And Marianne Hancock, who is the CEO of Y Analytics and a partner at TPG. And along with Brookfield, TPG and BlackRock are launch partners in Altera. And I want to introduce to you today the vision and mission of Altera, why it was set up by the UAE and what's been achieved in the past 6 months, because this is a model. It may not be the only model, but it is certainly one model that has been applauded for its ambition at this point to try and plug this funding gap. Ambassador, I want to start with those very questions. Just walk us through what the vision and mission behind Altera was, how it works, and how it's doing 6 months in.
Well, Becky, thank you so much for having us here. And of course, thanks to the Rockefeller Foundation for this great event. Last year, we spent the whole year traveling around the world, looking at what were the challenges of climate change. You know, COP28 was about the global stocktake. So that meant that we needed to assess what was going wrong, because we knew we were off track to achieving our goals that were laid out by Paris. And time again, we heard that there was a lack of climate finance to address the gap. And we know from the research that's been done, from academics, that we're looking at 2 trillion in annual investment in the global south and 4 trillion globally. These are big numbers that we need to address, and it's just not getting there. And that's why our president launched Altera at COP28. And I can tell you that Altera is game-changing. It's really driving the investment through our partners and future partners in the global south. And we're pioneering the future of climate finance. And we're delivering climate solutions that change the narrative from one of a climate challenge to one of a climate opportunity. Because one of the things we really felt was that we needed to talk about what we were giving people rather than what we were taking away. And that means that we need to mobilize capital at scale. Our initial capital of 30 billion, as you said, is to mobilize 250 billion. We see ourselves as the bridge between the public sector finance, which we know is not enough and needs to be more, and then we need to mobilize the private sector. Because of our unique structure of having these 2 funds, our transformation fund and our acceleration fund, we are that bridge between these two to try to drive investment, and we've been successful already. Through our partners, we're launching 3 different funds across debt, equity, and infrastructure that will drive investment in the global south, but will address climate change globally. And I think that that's really what the value proposition of Altera and why we're innovative and game-changing.
I want to talk about the way this works. The split, 25 billion into the acceleration fund and 5 billion into the transformation fund. That's where you see the risk mitigation capital effectively at work. Why that split was as it is, and how you think that's going to work going forward. But let me bring in our other 2 esteemed guests here. David, with more than $110 billion invested to date in the energy transition, BlackRock is no stranger to the opportunities and risks associated with climate investment. Can you just explain briefly why BlackRock was so wedded to the idea of the Altera Fund when given an opportunity to be an inaugural launch partner, and how this model goes some way to unlocking capital flows?
Yeah, happy to, and really happy to be here. It's exciting for us to continue to talk about these important partnerships because that's really what it takes to mobilize capital into these markets. BlackRock for a long time has used its platform to talk about the need to mobilize capital, especially into the emerging world for these types of investments. And it's really driven by the need to create clean and available, reliable energy in these markets, but it's also serves our clients. I mean, let's not forget, you have a mountain of capital that is looking for infrastructure investments and looking for access into these markets with very limited opportunities to actually deploy capital in these markets. So if you go back to 2021 when we launched our first climate finance partnership, this was an opportunity to really bring public money together with private commercial capital to invest into these markets in a way to amplify that capital. So there's a 4-to-1 ratio in that fund in terms of $4 of commercial capital for every $1 of catalytic capital. So now fast forward to the partnership with Altera, and I think we were able to leverage that experience, bringing nearly $700 million focused on emerging markets, and now to really amplify that and look to bring double that amount of capital here in our next vintage by really utilizing, again, an even more creative way of blending capital together, using both concessional capital as well as the accelerant that the Altera capital provides, and commercial capital into what is a very deep opportunity set to invest in the infrastructure that will facilitate the broader energy transition. And it really has the effect of de-risking these opportunities in a way that make them on par and as attractive as investing in infrastructure in any other area of the world. It also allows us to partner with the leaders in this field, the strategic players who are looking to expand their footprints but need access to capital. And so we can be that capital partner for them in these markets as well.
Thank you. Let me just bring you in, Marianne, at this point, because Y Analytics is very specifically set up to support TPG's funds, including your next generation of Rise Climate private equity funds, which I know are very much associated with the partnership that you've got with Altera. But your role is to do a deep dive on economic impact, economic opportunity, investment opportunity in the climate field, and identify the most effective and impactful tools in unlocking this money that is needed for scale, and at scale, of course. What are those key opportunities that you've identified out there? And what's the ambition, to your mind, of the Altera Fund, and how does it work?
Sure. So there's no easy silver bullet out there. I think everyone in this room, everyone watching knows that. But there are some 2 or 3 real unlocks going on that I think are worth talking about. And one of them has to start with the Altera, what I would call the Altera first in, capped out model. So we've been talking about that broadly, but let's get specific for a second, which is that as managers, we are guided and in some ways bounded by what the asset owners want to do with that capital. And while we've been privileged at TPG to be able to invest in the Global South for well over 2 decades, that's usually in the context of a more blended fund. It's not usually a dedicated fund. And by the way, we feel privileged to get to do that work because not everybody gets to do that work. So that capital is actually pretty limited. So the first in, capped out capital is an incredible breakthrough. We've been working on blended finance in these communities for many, many, many years. But it's powerfully simple for Altera to say in the transformation vehicle, we will put that capital in first and we will cap it such that other investors will be inspired to commit.
So basically saying, we're not going to make an awful lot of money out of it. That's the idea, right?
Right, and they will make money, and I know you'll probably come to that as well, but it is to inspire the other investors to come in and dedicate that capital to managers who are on the ground and know how to do that work. So that's one piece of it. And to your point, that's not the only thing that's going to solve climate finance in the Global South, but it is a big unlock. The second one that we see as a real unlock is actually just the investment in climate solutions to scale those solutions. And that's what the other $25 billion of Altera does. Because what happens here is this is not just about bits and bytes, the way software and technology scaling is. Climate solutions are electrons and molecules. It's very physical. So we need to be able to scale and use the capital to go from just beyond science project to contracted renewables. There's a big gap in there. And what happens when we scale that is it lowers the cost structure, the unit costs. That's incredibly important for us to be able to get solutions into the Global South. So that's 2. And the third one I would mention is more of an idea. But if we think about all of the information, all of the knowledge and experience in this room, and as Ambassador Majid said, you take the private sector, you take the development finance communities, you take the philanthropic communities, often we're not speaking the same language. So is there a way to create an investment bank for developed finance, for blended finance, that could help to surface these?
An idea that I heard surfaced in Dubai in December last year Right, let's just do a little bit of a deep dive here because there is a room full of people who are eager to hear about how we address the very specific issues that are faced by the global South. Again, put on the menu, put on the table at COP28. The Altera Fund includes $25 billion for the Acceleration Fund, as we've discussed, which is expected to operate at market rates, and $5 billion for this Transformation Fund, this risk mitigation capital. Why did you create this special vehicle for the Global South? And is a split in funds sufficient for countries most in need of additional funds at this point? I'm wondering, for example, where that money will be invested and how. And perhaps from both of you, I'm interested in, given your experience with climate investment vehicles, what the split is generally to date, developed versus developing world, and how you, with the Altera Fund, but with others, how you are addressing that space, which to me just, it doesn't sound sufficient. So can we start with you? It's fantastic. I'm not denying that. But on out of 30 billion, there's a very specific 5 billion for the Global South. Why?
So when we started, we understood, just as Marianne said, that there's going to be no silver bullet. The topic or the area is so complex, and there are many different areas that have to be addressed by different actors. And that's where the development institutions need to come in, the financial institutions, policymakers, governments themselves putting in place the right policies. So when we came to address it at COP28, we thought, okay, well, what are the real concrete things that we can do? And one is our finance framework, which for those who aren't aware of it can go out and look at it, and that's where you're having that policy conversation. So that's the policy piece. And then when it came to capital, the easiest thing that we could have done was to have more concessional capital. But what we heard time and time again was that was not what countries were looking for. What they were actually looking for was something more sustainable, something that would attract the private sector. And the private sector wants to invest in things that are going to grow and that are going to scale. And so that's why we put all our brightest finance people, and in the UAE we have a really strong financial community, and we partnered with some of the best minds when it comes to finance to figure out, well, what is that blend that would work, that would set a model. And by the way, we don't want it to just be Altera. We want as many others to copy this model, that would create a blend. And so we believed that first we had to have this test that any project we invested in needed to be sustainable, it needed to be commercial, it needed to work. It couldn't just be money thrown after bad, that it needed to be investing in something that could scale up. So that's why our transformation fund is not concessionary, it's catalytic. So it's driving into places where you might want to have a greater risk appetite. And then having the acceleration fund, which gives it the scale so that you can invest globally, but in the global south as well. So the idea being exactly as I started out with, that we're a bridge. We're a bridge between the development finance that we know we need more of, and the private sector that we need to incentivize because they have responsibilities to their pension fund partners and their investors to generate commercial impact. And our leadership is their vision to say, hey, what can we do that creates an acceleration effect? And I think that's why Altera is game-changing, because through this blend, we can trigger an acceleration in investment and particularly in the global south.
This partnership, David, thank you, Ambassador. This partnership sees about $2 billion invested in climate opportunities across BlackRock's private debt and infrastructure equity strategies. I think it would be really useful for this audience to get some specific examples from you of an infrastructure or clean energy project that you've recently invested in that you believe can help drive the change. And very specifically, if you can, provide me an example from the Global South. And I am, on the back of this, interested to hear from you what the split is between developed and developing world at this point on a more broad base.
Sure. So, look, I think that maybe just start with your last question there. If you think about kind of how capital is being deployed into these markets, it's probably about 10% of all the private capital invested into infrastructure is making its way into the global south. Now, that number, could be plus or minus, but so there's a massive disparity between where the capital is flowing, and largely that's driven off of the risks, both real and perceived, of putting capital to work into those markets. And that's why creative structures like the one that we're talking about are necessary to really facilitate getting commercial capital more comfortable with these markets. And maybe just to highlight a few examples, as you point out. So we're invested in the Lake Turkana wind farm in Kenya. So this is a 310 megawatt project. And this project has a 20-year offtake agreement with Kenya Power.
What does that mean?
So that they are buying the electricity at the bus bar at the point that it is generated, and it's providing 12% of all of the electricity in Kenya. There's an opportunity to expand that project to nearly double the size of that project. And so by bringing in commercial capital from the global, institutional commercial capital from the globe, to be able to see that this project both operates the same as a project anywhere else in the world, that the bills are paid on time and the cash is distributed to those investors, that we are able to manage the currency risks associated with this asset. This is just building confidence. It's building muscle memory, if you will, with institutional investors that these markets are healthy. And as you look at sort of the sovereign risk and the credit risk of the sovereign, that can be a place where people get hung up, but they don't actually look at the credit of who is paying the bill for that electricity, which is in many cases in the global south, Africa in particular. You have very cash-rich utilities able to pay those bills, but investors do not have a conduit to get their capital into these markets. And so we see this project as, a great opportunity for us to both deploy capital, earn a return immediately, but then also have the opportunity to expand our footprint in Kenya, through the expansion of this project.
And I will add that Kenya already has a history of successful renewable projects and wants to be fully renewable, and it's a great ambition, and it's a target that seems achievable at this point, at 100% renewable within some years. That's great. I wonder if you've got an example of somewhere where there isn't that sort of precedent environment set, which is more tricky, which is more difficult to work in, which doesn't have the same sort of support from the investor community when it comes to the numbers.
Yeah, so we can go, we could go through our whole portfolio, but maybe I'll go to an opportunity in the Philippines that we've invested in. I mean, what's interesting about the Philippines in particular is climate risk isn't just it isn't just about decarbonizing the environment. They're experiencing the physical climate risk on an annual basis in this part of the world. So it's a very serious issue, and one that has been really challenging to deploy capital in at scale. And so here we've been able to partner with a company called Clean Tech. We have a 1 gigawatt pipeline of solar projects that we anticipate building out by 2026. So this has the effect of not just replacing dirty power with clean power, but it will increase access to energy to about 125,000 customers. And so, I think this is a great example where, without commercial capital coming in, there isn't enough domestic capital to facilitate this investment. We're able to actually accelerate not just green electrons in this market, but also energy access, which is a big part of this story as well.
No, this is great, and this is about required impact, right? And we've talked about the split on the Altera fund, the urgent need to add additional climate finance into the system to ensure the required impact. Marianne, let's talk about impact, because impact is crucial. How does Y Combinator measure the impact of climate-focused investments. I mean, just getting the analytics, ensuring that the funds have the required information to make strategic decisions is absolutely crucial. Can you just talk about some of the work that you're doing?
Sure. Y Analytics does that exactly what you're saying, impact assessment work. Every deal has to meet both a financial test, is it going to be a market rate of return, financial opportunity, and an impact test. And probably the most important metric or decision tool that we need to be focusing on broadly is the carbon aversion potential of a climate solution as a return on the investment. Now, most of the time when we're having a climate conversation, we're talking about scopes of emissions, scope 1, 2, 3 emissions. Very important, particularly important in decarbonization. But when we're talking about climate solutions, we need to shift. We need to think about carbon aversion potential. And
What does that mean?
And so let's get into that. Let me give you an example. If you have rooftop solar on commercial and industrial buildings, as we do in an investment in a company called Fourth Partner Energy, and you have that in India, or you have that in the Nordics, it's going to have roughly the same scopes of emission. You have to create the panels, you have to deploy the panels. It has 6 times the power in terms of carbon emissions aversion potential. It's because the displacement of the Indian grid is so much more important, so much more powerful. And so when we think about carbon aversion potential, we have to think about what is that solution doing to displace carbon. And we have to think about it in a way that centers place and centers geography and community. Because what we really need to say is above and beyond what would have happened anyway. That's that additionality that we all talk about. So carbon aversion potential above and beyond what would have happened anyway. And importantly, as a return on investment. Because guess what? A lot of things sound good. And we do not have the time to waste money going after things with just incremental amounts of impact. We need to think about that return on investment. So that's the way we think about it. Lots and lots of research that goes into it, but it's critical we turn to that.
Can I ask you all, thank you, what you see as the trends for this year and beyond? What are you looking at when you are looking at potential investments? Where are you seeing the opportunities at this point, David?
You know, one of the areas, Marianne just touched on it, it is very much tied to distribution level installations. So your ability to, generate power and use that power on the same site is a great opportunity. It also takes the need for more grid infrastructure to be installed out of the equation.
Because that is a massive bottleneck at present.
Absolutely. And all globally, that's a massive problem, and certainly in emerging markets. So we see a lot of opportunities if you go through the things that we've invested in most recently in Brazil, in Malaysia. These are opportunities where we can put those behind what we call behind the meter projects in place, and they are quick to install and they have an immediate impact. The other place that we're very excited is the electrification of transport. And this is a real opportunity for the global South, much like we saw with landline phones to mobile phones, where we can see an opportunity where you can actually build out the right infrastructure, the infrastructure of the future, and the infrastructure of the future of mobility.
How important is this year, the year when half of the world's population will vote, and many of them have already done so or are about to do so? How does the year of 2024 and its year of elections affect your investment decisions?
Well, it absolutely affects it, and it will globally. In the U.S., not every country has an IRA, an Inflation Reduction Act, but in the U.S., one of the things that's most powerful about the IRA is that scaling of solutions, but it's also powerful in terms of where those investment dollars are going. And so we see a lot of stability in that because it is being invested in communities that happen to have a real need for jobs. We have a wonderful example of that in a company called Hybar, which is green rebar of all things. So, it's not electrification such, but it's green rebar. It's actually producing because it uses electric arc furnace, uses scrap material. It's one of the largest, it is producing at a very low cost. It's one of the largest economic development projects in Arkansas right now. It employs people who did not have that opportunity to make the wages they did. 10 to 15% of those people are formerly incarcerated individuals. There's a lot of really good things going on there. And so the politics absolutely do matter, but this is why we come back to, as investors, unit costs, which I mentioned earlier. And as we continue to see things get less and less expensive because we come up with that experience curve, it becomes a much more natural force. And in terms of excitement, it's not just on the electric side, which is obviously really exciting. We're also seeing it on the clean molecules side. So we're seeing companies that can recycle polyester incredibly well and incredibly inexpensively. We are seeing carbon blackened tires get greener, green rebar of all things. So these are things that on the molecule side we also see as really important.
Just talking about sort of trends and investment opportunities. I mean, obviously, you are at the outset of this this project that you have. You have, I think, through the partners, invested some $6.5 billion of this money. What happens to the rest? What's the next iteration of this? And how does the Global South, stay in focus for you?
Yeah, I think when we started, we wanted to make sure that people understood that this was real. This wasn't just a pledge. And that's why we made that $6.5 billion commitment through our 3 partners. And we feel that we've been successful already because they're already driving investments into the Global South through the work that they're doing with their existing funds, but also through these new funds that we're creating. So I think in that sense, we feel really excited, but we need to go to the next level. That means that we need to start to look at how do we enhance our relationships with the partners we have, and how do we look for new partners to work with who are going to help us in markets that maybe we haven't touched yet. And that work does need to happen. I think that the point that has been made a few times here is that there are risks that are perceived sometimes and not real, and that our purpose is to prove the point that investing in the Global South makes economic sense. What we're doing here is scaling up a model that the UAE has pioneered for years, in that we've taken development finance along with commercial capital, invested in the Global South in places like Africa and Asia, and come back with commercial returns that make economic sense for the countries that we've partnered with. What we're doing with Altera is taking that model, scaling it up and speeding it up, and driving and working with the best partners possible to drive those investments into the Global South.
The UAE, and I'm just going to sort of finally close this up, the UAE will also be described by perhaps many as an energy pragmatist. A country which has been built on hydrocarbons, a country that continues to invest in the production of hydrocarbons, whilst massively investing and being incredibly ambitious about the energy transition, not just in the UAE, but for the rest of the world. And I just wonder, just finally, does that energy pragmatism that I know is very much part of the story at BlackRock these days, and TPG as well, does that energy pragmatism lie at the heart of the investment decisions that you and others will make for the UAE? And perhaps we should explain, if that is the case, why?
Well, definitely the UAE has been on an economic diversification journey for a long time, and you know this very well. We recognized early that we were blessed with this natural resource, but we needed to use that to diversify our own economy and to continue to improve the lives of our citizens. And our leadership have been very successful in that. Today, 70% of our economy is non-oil and gas based. We recognized early that we're good at exporting one type of energy, but we could be good, even better, exporting at the future type of energy. And I think that what gives me a lot of hope is that all of us have started to recognize that we need to move to this future that we all want, that we need to invest in the future of energy, the future of infrastructure, the future of agriculture, the future of healthcare. This is about creating a low-carbon future that is sustainable, where we can be adding to our environment and not taking away. And I think that that's what is at the heart of what we do at Altera. We're developing our climate impact framework as we speak. We're taking a very practical approach, but just as Marianne said, making sure that every dollar we spend or every dirham we spend has maximum climate impact.
BlackRock's latest data suggests that there is something like an $18 trillion gap to plug before 2030 when we talk about transition investment. I want to close with a very basic question to you guys. You're in the business of investment. You are responsible for billions of dollars worth of assets. Is the cash out there? I mean, last year, $1.8 trillion worth of capital was invested in the transition. That's up significantly from, 2004, when I think the number was 33 billion. The investment growth seems to be there, but it's just how we unlock it, and that's what we've been talking about. The cash is there, right? The cash is out there, David.
Absolutely. Both the cash is there. Well, no, I mean, but if you think about it, just think about sitting here on this couch with Marianne and I. There's capital that is hungry for opportunities to invest into this space. It just needs to have. That capital needs to be comfortable. That the risk-adjusted returns are appropriate, and so that's our goal.
Absolutely.
And with that, I thank you very much indeed for joining us. Fantastic.